From our Stars and Dogs segment, it's time for this week's Dog.
All right. The dog of the week is Intel, symbol INTC on the NASDAQ. Intel is a manufacturer of computing components, most notably the Central Processing Unit, better known as the CPU, and most recently its foray into dedicated graphics processing units, or GPUs. Intel stock has fallen roughly 10% in the last month, and 38% year-to-date to the $33 it currently sits at. Intel's recent Q2 earnings did not have high expectations, and yet they still came in extremely short, having only a non-GAAP EPS of 29 cents compared to the analyst consensus of 69 cents, compared to $1.28 for the same quarter in 2021. Revenue has also dropped 17% year over year to $15.3 billion. Intel's revenue has fallen in its largest two segments: client computing, which is your consumer computer, so your desktop, if you have Intel, that's what client computing is, as well as data center and AI, which is their large-scale computing units. While its smaller segments have picked up some of the slack in revenue, operating income has fell across the board, with a small exception of Mobileye posting a tiny increase and is more or less a blip on the overall structure of the company. The top and bottom line decline is attributed to declining economic conditions and, more concerning, a failure in operational performance. A shift away from Intel in the x86 marketplace is taking place. x86 is the type of processor architecture that both Intel and primary competitor AMD use for their CPUs. According to the research firm Mercury Research, it estimates Intel's market share has dropped to 68.6% from 77.5% for Q2 2022 versus Q2 2021, respectively. This market share drop is in addition to the overall market declining 30% for the desktop CPUs, which is their largest segment. Looking past the fall in the CPU market, Intel's recent foray into GPUs has been anything but optimistic. The initial launch of the GPUs has been delayed, and now has launched into a significantly weaker market than what they could have if they met the initial launch dates earlier this year when GPU prices were going crazy. This has culminated in a drop in price, leading to a trailing PE of only 8 times and a forward PE of 14 times, based on Intel's own management forecast of $2.30 for the fiscal year 2022. The trailing and forward are quite low compared to peers and itself historically. Looking forward, Intel does have some hope in the long term, moving back to its fabrication facilities, commonly known as fabs, with support from the US and European governments, which I'm sure Aaron's going to have a couple words about. But any boom from these will not be seen financially for at least a few more years, because they take a few years to build and then a few more years to actually have those returns realized. Until then, Intel is in a precarious position, as its market share has been continuously slammed into a weakening market, which is why it is our dog of the week.